We now have over 70 companies that are special purpose acquisition companies, SPACs, out either looking for clean energy companies or have already found one. This episode is about how those companies are performing and what sectors are performing best. Welcome to Clean Energy SPAC Talk. All right, this is mid-February update, and I'm going to go through each of the different sectors. Here is a summary slide of performance of these 36 companies that have actually announced their target or have already merged into the new company. These are SPACs in the clean energy space. The categories include electric vehicles, batteries, Lidar Systems, EV charging, and then I have to have a catch-all because there are companies that are in several different sectors, but just not enough to create a group yet, including like fuel cells, materials, energy storage, EV components. As more companies are identified, we will break those out and show those as well. One of the big things I want to point to here is the $22.36 average share price as of the close last Friday, February 12th. That represents a 2.2 multiplier on initial investment at the inception. Each one of these SPACs, when they come public at $10. So that is, an impressive amount. We can see though that since the end of 2020, the increase has only been 3.1%. And that's because I feel most of these 36 companies have already announced. They got the big bump up about the announcement of that company because there's a lot of excitement and enthusiasm when one of these go public. So a lot of that was left in 2020 as those companies were being announced. And so it's not performing better than, it's performing in the same range as the S&P 500 once they have announced. If we go into detail of each one of these, I'm going to see if I can move my picture a little bit down. There we go. In the electric vehicle, we have 13 companies here that have gone public through SPACs. Fisker, Canoo, Nikola, etc. There is another one that was announced this week. Lucid, been huge news. CCIV is the ticker symbol of the SPAC, and Lucid is now trading, or CCIV is trading at over $50 a share. They can actually hit 60. So a lot of enthusiasm for that name and that company. We can see here that there has been good growth since January 1, mainly driven by the fact that Faraday and Hyzon and Proterra have all come public in 2021, and those groups have grown by 125%, 34%, 46%, driving the overall increase. And now Lucid will just even add to that. So a lot of companies around EV vehicles, EV trucks, and a lot of enthusiasm for those names as they have become public. Let's go into the next one. EV charging. I've got 5 names here. The big one is ChargePoint. ChargePoint has a 70% market share. You should know that in EV charging, and as a driver of EV vehicle myself for the past 12 months, over 80% of the charging actually happens at home. However, we need to see mentally a lot of charging stations in the public to help us get over that range anxiety, the anxiety that you have if you're not sure you can get from A to B. And Americans will likely not embrace the electric vehicles until they can feel comfortable that they can go from Milwaukee to Madison, or pick 2 cities roughly 100 or 200 miles apart in your state or country and say, I know that I've got several places to be able to charge should I need to. There's been a lot of enthusiasm for these names. You can see ChargePoint's are already trading about $40 a share. Overall, we're at 24 on average. EV Box is a big EV charger in Europe, and Europe is embracing the electric vehicles at a much higher rate than we are here in the U.S. Let's go to the next one. Lidar Systems. Lidar is electronics that help guide for autonomous, in a move towards autonomous vehicles. But there are also a lot of other applications for Lidar systems. Right now, we're tracking 5 such companies that have come public through SPACs, and the average here is about 21.29. Again, more than doubling since inception, about 7% since January 1st increase. And we need to add another one that just came public this week, and I'll get that on the list. I believe it is AI, which is AEYE, under the ticker symbol CFAC. So we'll add another one to the Lidar Systems this week, just like we need to add Lucid in the EV vehicle. Batteries, another huge place. In fact, QuantumScape, which is on the top of the list and trading in the 50s, actually, it's already gone back into the 60s this week. It has the record high of any SPAC in any industry at $132.73. It's well off those highs. And you can see a lot of that was happening right towards the end of 2020. So 84.18 was the closing price on 12/31. So we're off 35% there. Romeo Power is also down pretty significantly off its highs. So this whole group is not performed well since January 1st, yet they're performing the best since inception. This average price of $25.96 is the highest of any one of the sectors. So batteries, I think, are going to be a big story in this transition to EV mobility. So watch these closely. I expect that we'll see more battery companies also coming public through the SPAC way. The last group, kind of in this miscellaneous, I'd like to highlight MP Materials. There's a lot of talk about the transition to electric vehicles is going to need more lithium, cobalt, nickel, and these materials are not easy to get. Not much is coming from the United States. A lot of it is coming from China or other places like Australia and Chile. MP Materials is U.S. based and is getting most of its materials, I think, here in the States. It is now, it's at 35, but I think it is trading at 40 today. So watch MP Materials. Another one also came public this week, Origin Materials. And that Origin Materials is not necessarily in the lithium, cobalt, nickel, but they are in looking at the whole, all of the materials being produced. And really interesting. You should go take a look at their investor presentation. The ticker is AACQ, and we just added that to our Clean Energy portfolio. Excited about that one as well. And talking about batteries, there's another play on that. Is what do you do when the batteries are old and need to be recycled? PDAC is the ticker for the target that they just announced this week of Li-Cycle, Li-Cycle, and they do lithium ion recycling, which is going to be big in the next 10 years. Maybe not, if this EV thing really does happen, and I believe it will. Also, just want to point out STEM here at the bottom, energy storage. They are up almost, it was like 47, 49 today, yesterday, because of the Texas situation, blackouts, the grid not holding up, knowing that energy storage is going to be a big play in the future. we should look for more energy storage companies to be coming public, likely through the SPAC. So this group here has performed up 17% since the beginning of the year and through the first 6 weeks, and its average is also over $20 a share. What are our takeaways from all this? What does any of this mean? Well, with the average share price of $22.36 across all 36 of these companies, it is a 2.2 multiple since inception as these companies come out at $10. That's pretty impressive, and I think that those gains are going to continue in the clean energy space. Yet, the year-to-date increase of these that have already announced was only 3.1%, slightly below the S&P 500 return. Although our total clean energy portfolio is up 12.5%, that goes back to most of the appreciation, or a lot of that appreciation is coming out when the target is announced. And so you need to get in early to be able to be a recipient of that enthusiasm when they announce a target within the clean energy sector. So our clean energy portfolio now, like I mentioned at the beginning, 70 tickers. We've added 25 since the beginning of the year. And the strategy that takes more risk off, more opportunity for return. If you can buy these when they first come on the market, as close to the $10 as possible, hopefully under 12. The only disadvantage of that is that you're going to put your money into a stock that's not necessarily going to do much for the first 4 to 6 months as they are out searching for their target. They actually have up to 24 months, so it could be a fairly lengthy opportunity cost you're giving up by investing early. But if you have the money to sink into and sit in one of these early stocks, that's probably a pretty decent strategy to take some of the risk off and to maximize your return. I've got a list of here 18 different stocks that have come out since the beginning of the year, and it's also because there's so many, you just can't buy everything that's coming out. So looking at proven teams, have they done a deal before? I think is a great kind of way to prove yourself. So look at the top one, Star Peak Corp came out on January 6th. It's already trading a little over $12. Their first target was STEM, and that's proven to be very successful. You can look fourth down, Switchback 2 Corp. Also looking at sustainability, is trading at $12.40, and they did ChargePoint, and that came out on the 8th of January. So these, you can see the money's already kind of being attracted by these companies that have been, successful teams, and that they can do this again. So, any questions? Let me know. Shoot me a note, either on Twitter or my email, and I will look forward to talking to you next time. Take care.